I mean, I know what it is and stuff like that, but I
Mm,
may not have studied the way you teach it. So I'd
okay.
prefer just to,
All right, no problem. So what I've seen, and I'm trying to get my eyes to kind of recognize it all the time, is ICT teaches that in order to find profitable setups, you need to find liquidity runs. So I've kind of been going over it for a little while now, trying to let me share my screen. Okay, I've been going over it for a little while now, trying to, master it. But for this particular setup, the breakup structure, and then you find in the imbalance, the inefficiency in the market that the price may come down to, because you want to think of it. I think what helped me with my analogy of just trying to see how the market moves was imagining, like, I see in my head, like, there's one, I'm not racist, but I mean, we know that it's ran by majority non-Black folks, right? I mean, like I guess like the 1% of the world. So I imagine some guy sitting in, this big mansion, just literally running the market by himself. So he's having drawdown of like 12 million, and he's having profit of 36 million. So he has to move the market in ways that benefit him. So when you look at it like that, it helped me. I don't know if it helped y'all, but look at it like he's pushing the market down because he had plans to buy it. Now, then you have retail trailers or whatever, or traders or other people who see this move and then buy it up. Well, their stop losses are underneath here, or I guess their sale limits, because then their idea, if the market breaks this, is going to be going down because it's now broke the most recent high or low. So with this breakup structure strategy, you just wait for a breakup structure. You can do it on any time frame. I go from the 3 hour to the 2 hour to the 4 hour. It just depends. Even the daily, if it's going to be like a long swing trade. And then you find out. And you find out what's, I guess, according to ICT, this whole thing is, I guess, an order block. It's a series of down post candles that break structure. But for me, I don't know if I went in on the 30 minutes. And sometimes I go like all the way to the, let me back. That thing has been missing out. Okay. You have like a head and shoulders. So you kind of see the inverted head and shoulders. So you kind of see the market. I think that's the thing. We know like patterns and stuff, and the patterns in the retail trading really does help you when you start learning liquidity and inefficiencies, and all that fair value gaps, same thing. But I think here, once I see a break of structure, I go down to the lower time frame. I don't remember what it was that made me put my POR here. I should have looked beforehand, but I forgot about this. But you want to go down to the lower time frame to look for a specific candle that caused the break of structure. I should have did this beforehand. My trading view always does this. Okay. I'll do another break because I don't know if it was on the 1 minute, but we say that structure has been broken. And then my best guess is that it's going to come back because the incompetent man is what they could call him. He's sold the market down to buy it up. He still has his sell orders in. So he's going to accumulate liquidity while pushing the market back down to the point of interest to close out his positions or, mitigate most risk before he does his thing. Does that make sense, guys?
Yes.
Okay. So with this, I don't know if it was a 1 minute or 5 minute, but I'm gonna find the exact candle. It's my POI screen here. I mean, you can look at it both ways. You have okay. I guess this one I did as a breaker block because it broke. Okay, yeah. Okay, this is what I did. Okay, so this was a breaker block entry. So it had a bearish order block that it blew through. It probably was on the higher time. Was on the 4 hour? No, it was on the 2 hour. Okay. So it had a bearish order block that it blew through. And it left an inefficiency that I wanted to see get filled. So it rallied up and it made a low, a swing low. You have a low and then you have a higher low to this side and higher low to this side. So I was already interested in this spot and I wanted to see a low created and I wanted to see it take liquidity from that low and come back to this point of interest. And it did just that. And it reacted off that. And I just took it up to equal highs. Now this one, I kind of entered this prematurely because I sometimes am very risky. But I want to see the same thing happen again because it's broken structure again, and you have this big inefficiency. I mean, this is a pretty big, you have imbalance. I think that it was on the 4 hour. There's a big inefficiency in the market and I am anticipating it to be filled to come back and then also taps into this order block and then taking it up. Now I anticipate it taking out was it the weekly? Let's see. Or is it the daily? Yeah, I anticipate price to sweep this daily because ICT also teaches when, yes, inefficiency and balance, the same thing. I just say whatever. Okay, so ICT teaches that if a price is too leveled out, you can anticipate that it's going to be swept. Or the weekly, the daily. So that right here tells me just by looking at the chart, there's liquidity resting here. So I'm anticipating for them to smash some liquidity, hopefully, after the push down to fill the inefficiency, to rally up. And then I'm thinking that GBP odd is going to be going down for a long swing. And y'all have this? Can y'all say yes? Can y'all unmute yourself?
Yes.
Anybody else? I really want y'all to unmute yourself if y'all can, because I really want y'all to talk.
So I think I'm a little slow.
Okay.
I was saying I think I'm a little slow. I'm not really
Slow.
getting it.
Okay.
Was there a video that we're supposed to watch before this or anything?
No, I was just going over it. I'll send you a video, but I was just going over the trades that I entered and why.
Oh, okay.
But if it helps, I will send y'all a video. And then we're gonna watch a liquidity video after this. So it'll kind of show you, when you see stuff beforehand and then you watch it and then you see it again, it's easier to
Yeah. Okay.
Stop. Go ahead.
Oh no, not you. I was telling my. That's
Oh.
why the cat. My cat was all over the place. Sorry.
Okay. I think I entered in.
Brianna, are you looking at because you're, was that I'm not sure what time frame that was you were on just before that. Was it the 4 hour or 1 hour?
Yeah, I'm pretty much like on the 4 hour or 1 hour. Yeah.
Yeah, I think it was the 1 hour. So are you looking at the that order block as the entry?
Right here? Yeah, you can.
Yeah.
You can, but because you if you see like multiple confluences, like it's better. But yeah, that's another thing. Once I want to see for this particular setup, I want to see a new low right here, and I want it to come higher, or maybe it's it could be right here, come a little bit higher and break through this to kill that liquidity.
Mm-hmm.
And then once I know that liquidity has been swept, ran through, then we're good to go. I entered this trade.
Where do you see the liquidity? I'm confused on that because I thought liquidity is usually around equal highs or equal lows.
Well, when price is rallying up and it makes a new low, typically the liquidity is below that low because that's where you initially, if you were buying it, people put their stop losses below the low so that if it does come back, or they may put their sell stops below this low because in their mind they think, okay, well, if it breaks this low, the market's going to be reversing.
I'm not sure who said that, but just referenced because she's on the 4 hour time frame. If she went down, you would see the rally.
Okay.
That's sorry about that.
It's okay. It's okay.
I agree.
Uh-huh.
And also, I think it would help if they would think of it like when they were trading with Ruby or anybody who didn't trade smart money. When you see the price going up like that, most people just draw a trend line, and that trend line under the trend line would represent liquidity stops or whatever, right? Like people tell you, oh, it touched once, twice. This is where your stops will go. I mean, most people wouldn't draw it that low. They would draw it right under the
most recent. Oh, right here.
Right. So you see how price is coming back, touching the trend line.
Yes.
So people would have gotten liquidated that second time, right? And now they're back. Now they're back buying every time it touches, and then it dips way. So
I didn't visualize a trend line. That's why I guess I was just a little confused.
Right.
Okay, Bri, I got it now.
Yeah, that's a better, I guess that's a better thing for you slow people. No, I'm just kidding. But yeah, that's another thing I forgot about. But yeah, so once you see that, and that confirmation that now the encompassing man has like taken orders, they're this is what they're doing. This is the retail logic, like buy at the trend line. And then it touches here again. So you have a million people buying this. Stop losses here, 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 because and then if they believe that if it does break this, it's going to do this. Because they're doing support and resistance. So once it breaks, people are now, once it took the incompetent man took out the stop losses of the buys. And then now you have people that are selling it, trapping the people. But institutional traders know that when price gets down here, it's feeling an imbalance and efficiency. It's coming to a order block. Liquidity has been ran through, and now you want to buy it up, and they're going to snatch liquidity from these stop losses here. Take those and use that money to whatever to buy more positions, long positions. So y'all got that?
Mhm.
Okay. Okay, and then I did one for RJPY. I don't think it's going. I don't know. It's just really it's really ranging right now. It's getting on my nerves. But it did the same thing. I had to break a structure. You have liquidity here at the top. Some people have their sell stops. Their stop losses and the buy stops here, because in their mind, if price reaches this target, it's going to keep going up. You have liquidity here. Underneath this low, it has been ran through. It came back to my point of interest, and it's really been ranging. So hopefully it'll push up. We'll see. But if not, I'm only risking 11 pips. That's what I like about these, because you can really risk a lot of the less pips. And then this one, I don't think it's going to come back to it. This is another form of liquidity that we're about to watch. How you have the slanted lows. I think it was on the one. You can use a line chart, but you have slanted lows, and then you have liquidity run. I'm hoping it will push up all the way. I don't know, because it has a head and shoulders, but let me go ahead and watch the video. Or let's watch the video so we can understand it more.
Dramatically. When we look at price, it doesn't matter what time frame you're looking at. Time is irrelevant for right now. The specifics about price action as it relates to liquidity, we as price action traders, we're looking specifically for reference points where we can hone in on where there is a high probability of liquidity resting in the marketplace. Now, liquidity, as it relates to ICT concepts, it relates to buy orders and sell orders. It's as simple as that. When we have a swing in the marketplace, as we note here, and the market trades lower, our understanding is there was someone that went short here. This position would be net positive or profitable as the market moves lower. As the market turns around, if those same positions were still held, their open profits would be eroding, and at some point, at this point right here, they would be at a losing position. Our understanding is if there's a short position, or traders that are bearish on the marketplace, if they have positioned a profitable trade here and moved lower, their stop loss order would be resting right above this high, or generally many times just right at that high. The market tends to find an interest in going back to where that large body of interest, or what we call liquidity in the marketplace, it would be buy liquidities. As the market finds these lows down here, as the market rallies away, our understanding is that there's going to be buyers that have positions that are net positive or profitable as it trades higher. At some point, when the market starts to trade back down lower, back into the area in which the buy orders would have originated from, their open profits would be eroding until eventually, moving into this area here, they would be at a net loss position. So when we look at price, the idea is we're not looking for specific patterns for the sake of patterns. We're looking at where existing orders would reside. So essentially what you do is you're targeting areas at which the market has already seen a willingness to go higher or lower. In this case, we see a swing high and the market moves lower. We view that as a smart money trader or as a market maker perspective. We know that there's going to be buy stop or buy liquidity above that high. When we look at the lows, when the market moves away from these lows, we see that as sell liquidity. Identifying both of these positions on both sides of the marketplace, we're going to teach a concept called open float. While that's not going to be covered in this specific tutorial or this month of training, it's important to understand that the beginning foundations to understanding liquidity as it relates to buying and selling in the marketplace. Our first fundamental understanding is that there's going to be liquidity above old highs and below old lows. When we understand that, we can see that they will eventually target these same levels, moving price just above a previous high, knocking out the liquidity that would be resting just above those highs in the form of buy stops. Below old lows, the market will seek liquidity for the sell side or the sell stops, taking those orders out. Understanding this premise, when we view price action, it removes all of the retail-minded perspective, but heavily leaning on indicator-based ideas. When we adopt these principles with study of price, it gives us the most truest, purest view of how price is delivered. We have no confidence or direct relationship to our directional bias on price relative to anything except for price itself. If the markets move from an old high, we know that there's going to be liquidity resting above that old high. If the markets move from an old low, we know there's going to be resting liquidity below those lows. It's just that simple. Now, there's another concept when we understand liquidity. The market has a tendency to run out old highs and old lows, but it has a very difficult time to do that when the market has conditions like this. When the market moves higher, okay, generally we can see a move higher and then it moves lower here. Now, in the context of this entire move lower, there's a lot of peaks and troughs here, a lot of peaks and troughs. The idea is if this is an old high back here, for this high to be ran out, okay, or to seek the liquidity resting above that old high, if this is where the current market action is right now or current price at market price, for it to get all the way up there, it has to encounter a lot of resistance in the form of old lows and old highs. So you have the old lows acting as standard resistance. Then you have the old highs acting as buy stop liquidity. So even if the market's going to go up, if the market's going to seek the liquidity above this high, how do we know it's going to stop there? It could go another level higher for these buy stops. And it could reach for this level of buy stops and then maybe this buy stop level here. In the direction to run all these buy stops, it's got to go through a lot of resistance in the form of these old lows just to get back up to this old high. When the market presents these opportunities, and again, this is not specific to any time frame, it's universal. But when we see the market give this very thick area of resistance, okay, there's a lot of price action that the market has to trade through to get back to an old high of significance. We view this as a high resistance liquidity run. The market's going to have a very hard time getting through all of these previous lows and previous highs just to run out the liquidity that will be resting above this old high. When we trade, we are not looking for these opportunities. While there are opportunities to trade with this in mind in other later teachings, it's important to understand that this is the least probable trading condition to look for longs, because you have so many levels of resistance and old highs to encounter before you get back to the old significant high. We understand that the market has been presenting lower lows and lower highs, and somebody in this market is obviously would be being profitable. Those individuals with stops above this old high in the form of a fund, they're actually very highly defended because of this type of price action. So it's going to take a very sharp economic market release, the data, kind of like non-farm payroll or FOMC, that type of event will knock through all of these levels of resistance to run out that liquidity. But generally, without that type of influence or injection of volatility, these old highs generally are well defended. Obviously, the opposite can be said when we see the market make a low of some kind. It could be it take a long time really to form this, but the old low would obviously have sell stops below it or sell liquidity. And as the market makes higher highs and higher lows, if we're seeing price action right here, we can't reasonably expect the market to just drop straight down and make a run on the sell stops below this low without encountering first all of these higher lows and higher highs as the market went higher. So to get through each one of these highs, okay, there's going to be a lot of resistance to just run down out the stops that would be resting below this low. Again, just like we just mentioned with the high resistance liquidity run for old highs, the same is true here for high resistance liquidity runs on an old low. It's going to be very difficult for price to reach down through all of this price action, and the more time it's spent in this area, again, the more unlikely it is to make a market move all the way down to this old low. Despite the fact that there may be really high levels of liquidity resting below that old low, without the evidence of a significant market driver coming into play with like the FOMC interest rate announcement or non-farm payroll, or something that would be completely unexpected in the marketplace, a black swan event, something like that, that's generally the only type of thing you see that will cut through this type of price action to get to the sell side of the liquidity here. So for shorts, we avoid these types of occurrences. There are opportunities that we'll learn with trading with this profile or this market condition for high resistance liquidity runs. But for now, we want to understand that this is the element of price action that we want to trade very less frequent in. Now, obviously, there's going to be times when the market really provides us an opportunistic time to take action in the market and trade with price action and have very little resistance in our trades. And obviously that comes by way of trading in low resistance liquidity runs. A low resistance liquidity run would be in the form of something similar to this. Now, these crude depictions, while they are rather elementary in the way that they're being shown here, the concept is very easy to see in price action, as we'll look at when we get done looking at the actual crude diagrams I've shared here. If we see the market come off the old high, okay, and it comes down rather quickly, if there is a very sharp or one-way type direction, very little retracements of any kind, when we see this, okay, once that market breaks below an old low, from that point at which it breaks the old low until it gets through a short-term high, in other words, the market comes down, makes a low here, starts to trade off, comes down, makes a higher low. Once it starts running through, if we get a market break through this short-term high, this run here begins its climb back up into the range that's created by this low being broken. So it's being defined by this level here, all the way down to this high. Once it's broken, this area of price action is deemed low resistance. Now, every time that a new short-term high is formed, before this low is retraded to or retested as resistance, every time there's a new short-term high, what's going to form above that short-term high? It's going to have buy stop liquidity. So buy side liquidity is going to be above these old highs. If we get a buy signal after a retracement, we know that there's going to be very little resistance for that move to go higher, running out the buy stops just above these short-term highs. As we get closer to coming up into hitting this low that's been violated here, then we start encountering high resistance liquidity runs. So the probabilities fall off precipitously once we get back to the area at which the range is defined in terms of low resistance. And then it becomes a high resistance liquidity run. To make any higher highs or run on higher highs, it becomes a lot more resistance to do that because we move back into an area where the market has moved in a range. This expansion, okay, that's the easiest part of trading when we can trade inside that range. So every time we create another short-term high in here, if we get a buy signal, that buy signal will have very little resistance to get through the old high that it retraced from. And you continuously look for those until you fill in that break on this old low. Once it gets back to this old low over here, the market goes into what is referred to as a high resistance liquidity run. Anything higher than this price point here becomes a high resistance liquidity run. Much like everything else I've always taught, everything I teach one-sided obviously is easily communicated by using the reverse of it or just turning it upside down. This is a sell side of the marketplace, low resistance liquidity run. We have a consolidation in here. The market expands, goes into expansion. It breaks above a short-term high. So at the moment the short-term high is broken here, market structure is bullish. And then we go into a real quick run up. The market will create a high, start to break down. And once the market starts trading below an old low, the market will have a very easy time trading back down into the point at which this short-term high was broken on the upside. So all this one-way direction price action, where all of it looks just one-sided for buys only, very little retracements, this is the easiest time to trade in the marketplace, right in here. It's defined by the short-term high that's broken on the upside here. That's where you would begin your point at which it's deemed a low resistance liquidity run. So you're focusing primarily on selling short. Every retracement is going to find very little resistance going lower to run out the previous low. There's going to be what resting below these lows? Sell stop liquidity. So the market goes lower, breaks below the short-term low here, expands, has a small little retracement. What's going to be forming below this short-term low? Bottom chasers, folks that want to be long. But we understand that the market has broken an old high here and had real quick sudden price action, very little retracements. So we have very little resistance on the downside getting back to that point at which market structure broke. So between this point here and where the market breaks down this low here, this is the easiest area to trade in price action because you have very little resistance allowing price to just cut through all that. But you're waiting for a short-term low to form, and every time a short-term low forms, there's going to be sell stop liquidity resting below those lows. Okay, so let's take a look at more examples of a high resistance liquidity run and a low resistance liquidity run. And what makes those two types of liquidity runs different. We have an old high back here, noted here. and the market starts to move lower. And we showed this example of price action here with this old high, violating this old high here, selling off, these old lows being violated here. And the market starts to rally up. Notice there was very little resistance in the marketplace when this high eventually traded lower, taking out the liquidity resting below these lows here. This run from this high, taking out these lows, is referred to as a low resistance liquidity run, because we have a longer term high to the left of us, and the market has shown a willingness to take out a low, and then we came back above, cleared out a stop above the high, retraced, had an unwillingness to go above this up candle here. So institutional order flow, as you'll learn more about throughout this entire mentorship, moves back to bearish and expands to the downside. Expands down to the downside to run out these stops below these lows. The market rallies up again and fails to get above this swing high. This run higher is a high resistance liquidity run. The fact that it's going to have very difficult time getting above this high is because we've already priced in a longer term high, an intermediate term high, and this high is going to have a very hard time struggling to get through this high. It's going to have a very difficult time getting through it. So this rally up, if we were buying long here, we know that there's going to be a high probability that this is not going to be running out. The high is going to be intact. It's going to be defended. And the higher high over here will be defended. So when price goes back up into this high, this actually becomes a low resistance liquidity run to see price come all the way back down to take out this low here. The fact that we keep this old high in place and every low that forms has very little resistance as each time it moves through, it's like a hot knife through butter. Very little resistance. Every time a low is formed, price goes through those lows. This equal lows here, price trades through those. This short-term low here, price trades through it. These short-term lows here, price trades through it. So the bias is bearish. So you want to be focusing primarily on a market rally to take out short-term lows or intermediate-term lows. The difference between that is every rally is going to be viewed as a high resistance liquidity run. It's going to have a very difficult time getting above the previous highs. Sometimes it will happen, but generally you're going to find that it's going to have a very difficult time doing that. But because that's built into price action, having a high resistance liquidity run here, it turns into a low resistance liquidity run for you to see a move below the short-term lows. Every short-term low is an opportunity to seek liquidity or the market to expand down after a retracement up to take out the stops that rest below the marketplace at every old low. Every single low that you see in price, once we identify where the market is in terms of high resistance or low resistance liquidity, we can find old lows to the left, market respects it here, comes back, but then now we have a lot of liquidity resting below this low here and this low here, and the market runs right through it. Small little retracement, there's more liquidity below this low here, so it's going to expand down through it. We have old lows back here, so the market's going to do what? It's going to retrace a little bit and then do what? Expand down to take out those stops below this old low over here. The same thing is seen when the market finds a low in the market. The market creates a smaller consolidation, makes it a long-term low, rallies up, retraces, moves into consolidation, rallies through again. So now we have a lot of price action here. So this old low is going to be well defended. The fact that we have a retracement going lower each time, every time the market retraces, that's going to be in the form of a high resistance liquidity run. It's going to find very stiff resistance with violating old lows. The old lows are going to be actually defended, and you're going to see buying coming in the marketplace. Your focus is going to be primarily on the highs. Every short-term high is going to have very easy runs through them. That forms a low resistance liquidity run. the resistance levels are going to be very weak. The support or lows are going to be very strong because the market's going to be capitalizing only on the buy side. Just the reverse of what we saw over here on the sell side, everything's going to be supporting bearish prices. So every retracement higher sets up another price leg to go lower, aiming for the lows to be violated. We've changed the tide here and we made an old low. So every time the market retraces lower, that sets up new buying opportunities to take out the short-term highs or intermediate-term highs above the marketplace, because what's going to be resting above those highs? Buy stops. And you want to be buying low and selling to willing buyers above the current market action. And that's what the market makers do. So every time the market trades down, it's actually just a new low resistance liquidity run to make a run above an old high. It makes it very easy to find trades this way. Market trades down, small low retracement. Its old high will be easily ran out. Low resistance liquidity run. Market trades back and has a retracement. Very little resistance to get back up to this old high. It runs cleanly through that. Another retracement here. The liquidity is going to be resting above this old high. And eventually the market expands through it as well. And eventually the market trades through those lows as well. Okay, so there's many elements to the things I've saw in this month's teaching, looking for clean highs where the levels are just too clean. When the market shows those types of levels, it's going to be very opportunistic for you to build the idea that there's going to be buy stops above that. So any little retracement sets the tone for another drive through that. The market continues to find an ease of getting back through old highs. At some point, you're going to look at price action and it's going to be very crystal clear that the more price action there is around a specific level or a high or a low, that is indicating a level is being defended on an institutional price model. So you're going to see very easy trading when you trade away from that level. And by doing that, you're going to be getting yourself in sync with the institutional order flow. Then your trades will find very low resistance in the form of profitable exits and very little drawdown.
Okay, does that make it a little bit more, does it make it more sense to you guys? Nobody?
Yes and no. ICT is a guy that I have to watch like 3 and 4 times.
Yeah.
But eventually I do get what he's saying and understand it. It's just that I have to watch him several times to grasp it. And then I have to work it on the chart as well.
Okay.
I
You, Effie?
I agree. I have to rewatch it and let it sink in.
Okay.
Just remember, I'm slow.
Okay.
Why don't you
Anybody?
give us a summary of what he was saying?
Basically, okay, so with this set up, okay, let me share this. Okay. I'm gonna share this. I found this the other day and I'm gonna share it. So you have liquidity here. You want to chase it, or I mean, I guess he was saying, well, he was saying you want to find the setups where it's going to be ran through. So you have slanted lows. I like, let me show you on this one. Okay. Where's trade view? Okay, with this trade, I saw slanted lows. I used the line chart. Okay. You see slanted lows and liquidity was ran. Slanted lows and liquidity was ran. But this particular one, I had it coming up to here at least to maybe sweep this liquidity. So maybe my TP will be here because there's buy stops here. It may continue to buy. I don't know because it has a head and shoulders, but for this most part, I saw slanted lows and then I saw order block. So it told me, okay, so once it tapped into this order block, I'm expecting that it's going to be a liquidity run. I'm not the best teacher at this. Does that make a little bit sense or no?
Yeah, I get that.
Okay. Okay. So I like to use it like that was just like a double confirmation. I'm anticipating price to sweep this area because I know there's liquidity above here. So I want it to sweep here and then it may tap into this order block here and go back down, or it may do whatever it wants to do, but you want to get in when there's runs on liquidity. Let me see.
Can you show that chart again? The other little sheet thing?
I'm gonna post it in the chat too. But yeah, this helped me. Just to get your eye on focusing or even noticing where liquidity may be. You have equal lows, and you have people, setting their sell stops here.
Right. But why isn't it supposed to go the other way then? I'm confused. To run the liquidity, it's supposed to take out.
So I guess go ahead.
Am I having like a thinking error or something?
No.
She said sell stops, but I think you probably meant buy stops, Bree.
But that's still liquidity.
Equal lows.
Yeah, for the equal lows.
I
Right.
think what the chart may not show is that it would probably wick down and then run up.
Yeah.
Oh.
Okay.
Right, because you're grabbing, in that case, the buy
Okay.
side liquidity.
Right.
Or running it.
But listen,
Okay.
y'all,
So
yeah,
wicks
Yeah.
showing.
before y'all listen, the chart just shows you it's a representation of where liquidity is resting, right? The liquidity is resting where the lines are showing you, right? It's the stops are let's look at this first one on the swing. So below that line is liquidity.
Mhm.
Equal lows below the line is liquidity. Slanted lows below the line is liquidity. The range, which you call consolidation, above and below, is liquidity.
Mhm.
You have to understand this concept before you can understand how people will get liquidated in the market. If you understand where the liquidity is, hopefully you can better understand how to place your trades. So if you understand that there's liquidity at the equal lows, the third time, maybe you're not buying at that equal low, right? Like maybe you're trading down against the equal low thinking it's going to get ran through. Does that make sense? These are depictions on where the liquidity rests. It rests there because people feel like they're protected, or people feel like the market isn't going past it.
Mhm. Yeah, and what was said earlier, it's like right now, the wicks are not visible, which are actually taking out that liquidity.
But they may or may not be. It doesn't matter if they're being taken out at this point. This is the depiction of where the liquidity is. Right?
Okay.
Let's say there are no wicks.
Right, and it means that later it can come back to
Right.
that point.
Right. At some point, like if you understand that the liquidity is there, then you
Yeah.
understand that at some point it's going to get ran.
Okay, I got it. Mhm.
So
Friday,
another thing, let me finish this thought, Sean. With ICT concepts or any trading concept, this is going to require some time, guys. Like,
Yeah.
you can't watch 2 videos and think you're going to get it, because it doesn't work like that. This is a new language that you guys are taking in. So I mean, it took me months of watching this, months of going over things before it started to click, right? And every concept may not be for you. You might not trade breaker blocks, right? That might be too much at this point, which is why I introduced one way to get into the market, right? So I want y'all to understand that what she's teaching you is more, it has more lumps in the mashed potatoes, but it's great for your understanding. And I challenge y'all to go and look at these videos by yourself again and again, because it's going to take more than once for you guys to understand the concept, right? But this is all this is an add-on to what you already know. You already know about order blocks. You should already know about imbalances. You should already understand a little bit about Wyckoff. Now all you're doing is focusing on the liquidity. Where is the liquidity? There's liquidity in each of those areas. Why is the market moving where it's moving? It's moving to take out the liquidity. All right, sorry about that, Bree.
No, you're good. Thank you. Yeah, I'm not I'm still learning a lot. And like Tana said, like when I say like I can pull up my notes, I have been going over and over and like, I mean, over and over and over this, the whole ICT, like this is not even, I don't even know where the rest of my notes are, but you got to really watch it over and over again. And I'm hoping like the whole point of this meetings is because I want like to create like a study where we all stay together, because I'm still learning. There's still a lot that I have to learn, but I can see with understanding like liquidity and really, I think a lot of traders mess up because they don't understand price action. And you get all these confluences that price is going this way, you see a bearish engulfing, whatever, but you don't understand price action and the reason why price is going, there's a movement behind, there's a reason behind every movement in the market. And once you start to understand price action better, you'll be able to see, okay, look, my trades are going better, like they're going better. Like at first I was like, oh, I'm doing good because I'm only risking a few pips, even hit stop loss. But if you give in stop loss, it's going to add up no matter if you're risking 10 pips or 5 pips. So I was like, okay, what's going on? So you really have to see why price is moving. And like for like, what does ICT say? Oh, once you put your eye on specific levels in the market that price may go back to. This has been choppy. I think I shared this idea a couple of months ago. Was it entity? Okay. So I called this before I made this move. So I looked on the weekly and I really sat down and analyzed this pair. And if you go back, you see price, this got swept with this. This level got swept with this. This level got swept badly. This level, I think price was here. I anticipated this long sale because it had so many confluences saying that price was going to decline. You have an order block here. You had a 78 fib entry for the OTE for the bearish move. And then I had a liquidity down here, which I'll put it right here. So with all that, and people were like, oh, NZD Cat's going to buy, NZD raise your interest rates. No, I saw something different. I saw price need to get swept, and then maybe it can continue to buy or whatever it's going to do. But it played out perfectly because I understood where price was going to get swept, where liquidity was, along with the other confluences. So when you break down the charts like that, you look at the weekly. I mean, it makes a big difference in the trades you enter. So we got a lot to learn. I got some access to, look, God has been good. I really been on a hunt to really find stuff to give out, and I haven't really been able to download everything, but I have whole courses from like Track FX. I have like his whole mentorship. I have Cloud9. She does like more of a she's like a smart money and she's like a smart money in a retail trader. Like she trades like support and resistance, but I mean it's key levels and zones. So once I get and I transfer all of the mentorships back down, I'm going to put everything on a Google Drive, and I'm just going to we're going to start studying those videos. I think Track FX, he has a good mentorship program. And I have the whole program. I have Swaggy Seeds program. I have a lot of good programs I'm going to put in Discord, so y'all can start going over the stuff together, and we can start, really, really tackling these markets together. I hope y'all utilize them. I hope y'all appreciate it, because I worked hard to get the courses.
Did you get the psychology one I asked about?
No, I didn't want to keep asking her.
Okay.
So I'm giving some time, because she had to go get them. So like I've been networking with the traders, and God really been good. Like I got like a bunch of good courses. I got more books. Like I have liquidity books. I mean, we're gonna do the whole little shazam. So I hope y'all stick around, and I hope y'all stay dedicated, because I am staying dedicated to trading, and I want to elevate and become a better trader. So if we can all study, I hope y'all have the same page, because y'all, we can study together. I really want the homework assignment to be where we go back and I want people to go to pick their favorite pairs or whatever. And you find out where liquidity is, and y'all post it in the chats. It can be either time frame, but I just want y'all to get the line chart, and then you can do the template. And just so you can start training your eye to see where liquidity is. Y'all got that? We're going to be doing that?
Yes.
Okay. Y'all with me? Are y'all with me, or y'all not with me?
I'm with you.
Yeah.
I need y'all, if y'all on mute, I need y'all to type something in the chat. I need you to get an unmute and say yes. I want to hear y'all say y'all with me.
Yes, with you.
I'm with you.
Yes.
It's about damn time.
Shut up. No, but yeah, I really got some good courses. I cannot wait to go over it. I'm so excited. Like, God has been so amazing. Like, I can't stress that enough. Like my thing, and I'm just gonna share it with y'all. My thing with me is more so emotional and mentally. I battle a lot of things, and I haven't been able to like stay focused. But I told myself, like, Bree, you've come so far. Like, why in hell would you give up? Because just like last month, I was just like, I'm done. Like, I'm gonna take a break. I ain't gonna do this no more. But why would you give up? And then I think Ezekiel told me that he gave me the parable, or the story of the 3-foot gold or something like that. Like when you quit and your gold is right there, and then somebody else come and dig it up and they got the gold, but your foolish butt done quit. So don't quit. Like just keep studying, and I hope we can utilize these morning sessions to really learn. And I want us to all come together and pick maybe like 3 pairs, and we are going to break down those pairs, and we're going to start back testing those pairs, and we're going to start trading those pairs together. So that's my whole idea. So we'll see which pair. I like GA. That's been my baby for a while now. But once you see GJ, we can do GG, yeah. So once we gonna come with maybe even 4 pairs, since it's more eyes, 4 or 5 pairs. But we all gonna study them pairs. We gonna back test them pairs, and we gonna trade them pairs. We gonna break them down, and we gonna learn those pairs. So I hope y'all stay with it. I'm working on getting all the videos on my Google Drive, so I can share it with y'all, so we can go. Remember, the courses are good. I can't wait to really dig into Track FX course. I've always been a fan of him on YouTube, and YouTube only shows you so much, but the courses really are in depth, and I think y'all really appreciate it. I think y'all like it. But I'm gonna post the video for the liquidity runs, it's gonna take a while to get used to it. But once you start seeing where price may go, you will start seeing, more good setups. And then again, for anybody that didn't come, I think my trade of the week is gonna be GA, which I'm already selling. I did like a hedge. Todd told me about that. So I'm gonna wait for it to come down to my position and I'm going to enter in for the buy. Again, I want to see liquidity here. So I want to see, oh, right here. This is what I want to see. I want to see liquidity being taken out, come back to POI, and then I want to trade this up to potentially here. This is where, well, that's too many. Why is this right here? That's not 600 pips. Is it going to be 6? It may be a long swinger. I have it. Well, yeah. I have it here. But to be generous, you can do you do it here and it still would give you 300 pips to equal. I think I'll probably do it here. And I'll wait. Okay, yeah, this will be my TP, and I'll wait to see what price action shows me. But this is a trade I'll be looking at. Y'all got that? Does anybody disagree with this trade?
That shit is way too far out for me to give an opinion one way or another.
Oh, I'm sorry.
No, I mean the distance traveled and all the turnarounds and all that type of shit. That's what I mean. I don't mean your screen is too small. I mean, I'm not that good.
Are you saying the pips?
Yeah, I can't see that far into the future, so I'm not that good of a trader.
Oh,
So.
okay. Well, this is just pretty much the price had broke structure. Here, and there is an order block within this area on the lower time frame that, oh, it's 30-minute one, I believe. Oh, the 15-minute one. So this, you see this clear breaking structure here?
Well, I do, but I was going to ask, why is your line slanted up like that and not kind of going straight across?
Well, this is just to point out the breaking structure. I mean, you can do either or. I just do it,
Okay, that's cool. I would have did it more like that, and I was just wondering why you did it the other way.
No, yeah.
You want to show the slant because you want to show the break, Sean.
Yeah.
You want to show what?
The break of structure. The BOS, break of structure. See how she has.
Actually, but if you put the line straight across, you don't show the break of structure.
You can.
Well, but I'm just showing you how it's done. I mean, I know what you're saying. You can, yeah, but when you're showing people how to do this, you want to show the break of structure. You want to be clear about the direction.
Oh, okay.
Okay. So because it broke structure, I'm anticipating it to go down. You could put a sell limit, but I like to sometimes watch it on the 1 minute, and then I'll see, like on the 1 minute, you'll see price maybe consolidate, touch the POI, then break structure, and then you would get in here. But we'll work on that another call, because that's a whole nother thing. But sometimes I like to wait for confirmation on the 1 minute, and it typically looks like this when it's going bullish.
Can you show me a different pair? Can you show me the US 30, please?
US 30.
That's a heck of a pair right there.
I know, like.
No, I'm go to the Were you on the hour chart before?
Okay, this will be, okay, this one right here.
Go to the current price. I don't want to
Oh,
see that stuff. Yeah, we just broke structure, girl.
oh, okay, I see
Yeah.
it. Okay. So we have the BOS here. Now, really, let me go to
One of
the,
these order blocks sponsored it though.
yeah, this is order blocky, order blocky.
Maybe right there, huh? Up there by your gray mark.
Yeah.
Yeah, order block up there. Yeah.
Because this is the order block that caused the break of structure.
Or maybe it's the one after that.
I was just gonna say the one below.
This one has been. Oh, I did 45 minutes.
So is the idea to wait for it to go back up there to get in the trade?
Well, you want to understand where it could potentially go. It doesn't necessarily, I mean, eventually it's going to go up there. It might not go right now.
What I've learned from ICT with US 30 and Nas, although he doesn't necessarily do it for that, what I learned from him is if you have a bullish Monday, typically you'll have a bearish Tuesday, Thursday, and Friday, because Wednesday is generally a consolidation day. And it works out for both US 30 and Nas. And for the last 3 months, it's played out perfectly. And he does use the order blocks, but just breaking it down on the hour, but going to the daily to get where it's at and what direction that Monday wound up in, and even doing a fib for the whole week, it bounces up and down off the fib from the order blocks, and it hasn't failed. It's just me not trading it, but it hasn't failed.
But this should be a bearish Monday, I think.
So
Should
she's
be
saying,
a bearish
guys
Monday.
said-
We've got a whole bunch of news coming out on Thursday and Friday, actually Wednesday, Thursday, and Friday.
Yeah,
Tons of
this is NFP. But is this this? Can you go to the daily real fast? Yeah, we're bearing right now. So when it pops up tomorrow, it'll go to your POI, I believe.
and then I want to see it. Oops.
Do that first week first,
But I want to do this.
because I gotta have a take profit before that. You see that? See the wick on that white candle?
Right here.
Yeah.
I think that's where a monthly golden zone is too.
Then you can throw the fib on this boy. Right there in the yeah.
If it retrace right now, but
If it does. And that's another thing that I'm gonna add. When I'm looking for these moves, I do use a fib a lot. And I like to get in anywhere between the prices at the 61, really the 50 to the 78. If I start seeing price move or grab liquidity and do other things we'll go over, that's more probable that the trade is going to be successful because it's finished the retracement. So that's another thing.
So y'all think this is gonna go back up to that POI? I guess.
yeah, probably tomorrow. I don't think it's gonna go today. I think it's gonna go down. Like it didn't tap in. If you look at the daily order block, I can't see you, but it did go back up there and tap in, right? Well, I guess it kind of did right there at the wick.
Kind of tapped in, yeah. No, not really.
Oh. Yeah, so
Well,
I think it's gonna go back up there.
What time frame is this?
That was the daily, but this is 1 hour.
But see, if you want to get really, you can go to the 1 minute and like, let me see. That's what I do. If I see an entry, I go to the 1 minute to see like, is there any candles that may be just to refine your entry. You have one here. You have one here. So this is where I would be really looking at 30. Not bad at all. This one could be another good one as well.
And the one at the very top.
Yeah. I do think this one is a more strong, these two are more stronger ones.
Based on what?
On the candle of the candle draw, or what's the name goes over that I'm gonna share, that once it has a big push, that's more of a I can't think of the name, but
I think she's saying it's stronger candles. You know,
yeah,
the
you
volume
see,
of candles.
The more volume in the candle?
yeah, the more volume in the candle. So these are okay, but I think I'll be looking at these two the most. Maybe I may, you know, depending on how I feel, just put a sell limit and protect up to here.
I'm not putting no limit order on this.
Yeah. Well, if you watch it, you can, I mean, or when you wait till the 1 minute gets here and have a reaction and get in, yeah.
Well, you let me know how that go. I'm only sell stopping that.
Not a sell limit. Oh, you're gonna sell stop, okay.
Yeah, once the price goes past it.
Okay.
This is how I do.
So you guys think that it's actually gonna go up in the morning or still today or what?
You know, I wish I knew. Honestly, you don't know. You know, if you're asking me what I think it should sell all day and then go back up there this evening. But that doesn't mean that that's how it's going to move. You know what I'm saying?
Mm-hmm.
I mean, it could go
Generally, the high that's created today gets taken out Tuesday, Wednesday, Thursday, or Friday. So you got a lot of choices in there.
Yeah.
Okay, Des,
Yes.
you were saying something earlier about the Monday move and then Tuesday, Wednesday.
Yeah, what I learned from ICT video 5, and I applied it to NOS and US 30, is basically Monday sets up the move for the week. And so if Monday is bearish, that means Tuesday is going to be bullish, Thursday and Friday is going to be bullish. Wednesday is generally a consolidation day. And the opposite is true. If it's a bullish day, then you have a bearish Thursday and Friday. And I do find it does play out very well. I use that in conjunction with the order blocks. And also he talks about in that series, the highs and the lows. So if you have a high that's created today on New York, it will generally be taken out Tuesday, not Wednesday, Thursday, or Friday. Those are the days that he gives that it can be taken out. Same with the low. Now, if London makes a low, you can expect it to go higher, the market to go higher, if London makes the daily low. So you'll probably have 2 days of a high. Also, what I've found out with big news, and it may happen this week because we do have a lot of news this week with NFP, is generally we'll have 2 bearish days. Monday and Tuesday will be bearish or bullish, vice versa. Huge move on Thursday and Friday. That's what I have not only back tested, but forward testing it as well. It plays out really well. And it does play out. You just have to
Yes, I think we at least I did. Did y'all lose her audio?
off.
Can y'all hear Des?
Or
No, we hear you.
We
Okay.
hear her fine.
I don't.
but he to pairs. I started applying it to NAS and US 30, and works with USD pairs and crosses. And I've kind of been a little bit testing it to make sure that way I can do a pair or two, because I hate not being able to do that. But I'm playing it around with it with that as well. But it does play out really well with NAS and US 30. I will say that it really does. It looks horrible, but it works. So yeah.
Okay. So you're talking about the mentorship videos he got that are new now, right?
Well, no, not the new mentorship videos. I went to, it was the videos actually Todd told me to watch a long time ago about the Market Maker series.
Yeah.
And I watched, it was the one he was talking about to watch with the, with where the interest rates are and stuff like that for the pairs. And I did watch it and I was like, oh God, this is a lot. But then for some reason, Tanisha was like, yeah, watch video 4 and 5 again. So I did, and I applied it to NAS because I like NAS and I like US 30. And I was blown away because it was working with it. I was like, whoa, this thing is beautiful. But yeah, so it was the Market Maker series, video 4 and 5. And then I also started applying the kill zones to it because Danny told me about the kill zones. So I said, okay, fine. So I started watching Asia and New York and the London kill zone close. And I applied all that to NAS and US 30. And just like Brianna, I got notes galore because I watch it repeatedly.
Yeah, you
and
have
every
to.
time I watch it, I pick up new stuff from him.
You have to. Like I say, watch it one time without taking notes. Okay, this is what I do. I watch it one time without taking notes. Then I watch it again, like while I'm doing something, just to be hearing it over again. And then I watch it again, taking notes.
Mhm.
Like you literally, I've like I can hear, my dog knows this man's voice. That's how I be watching the videos. So watch him and take notes. And that's all I can say. It's not like I've been studying for a while now. But I mean, just watch it, and you're gonna see your trading get better. Because I have seen mine. I'm not where I want to be yet, but I've definitely seen improvement, and I'm very happy and grateful for it. But I have a long way to go. But I feel like if we keep going at it, guys, we keep studying, we keep doing things together. There's no reason. Like if we all come and we all learn one pair together, there's no reason why we should be hitting stop loss, because we all gonna be looking at it. Like we all gonna be like, okay, yeah, that's a no, that's a no. Oh, that's a go. You know what I'm saying? Like I think we have to have 10, 20 sets of eyes on a chart. You have to win. You have to win.
I agree.
So we're gonna pick our pairs. We're gonna do like a little poll. We're gonna pick our pairs. The homework assignment, I do want y'all to find a pair and put where you see liquidity, go over the videos and do the little line in liquidity and just post it in a chart. If you have any questions, just ask. We got a lot of learning to do, guys.
Thank you, Savannah. Did she say post some charts?
Yes.
I got, hey, Des, I know you got some shell shock behind that.
So y'all look for y'all liquidity, write up your liquidity. All you do is do the line and do it. And if you don't know, do y'all know how to, man, I found this so helpful using the templates. Y'all know how to do the,
I want to do that. Can you show it, please?
Okay, so you get the line, whatever you use, a rectangle, and you, let's see, I'm gonna put the text. This will save you so much time. Do the text. Okay. Then you wanna hit this button right here, save drawing template as, I can't even spell my name. Save it as here. So then when you, next time you have a line, it'll just automatically go to it.
Mm.
The same as the boxes. Balance, monthly order block, all that stuff.
Oh, thank you.
Cool, you're welcome. Okay. Okay, is there any questions? Or are we gonna get to study and then have questions later?
No questions from me.
All right, we got 15%. I want to see some charts. I want to see 15 charts. Okay,
15. What?
No, from other people, because there's
Okay.
50 people in the chat. So okay, so
Okay,
first
okay.
thing, so Pimp Queen, Elfie, Rashawn, Baba, Deshaya, Faith, Golded, Kim, Monk, Nadia, NB, Silver, and Will. I want to see some liquidity charts. I want y'all to get some
When is
charts
the
to
due
tell what liquidity is.
When is the due date?
When's our homework due?
And by the next Zoom, you got 2 days to do it.
Where are
So
we
when-
putting it?
So just get a chart and put the line where you see liquidity at.
Where are we putting the chart though, after we're done?
Oh,
with
put it in the channel.
In the A and B channel.
Yeah.
Eight, yeah, okay. Till Wednesday morning.
Yes. And then Wednesday morning, hopefully I have the video sorted out. I'm gonna go through Track FX's mentorship and see like the best videos, and we'll probably start going over his stuff along with the ICT, and just kind of like, I feel like a lot of traders that I've been talking to say you gotta, find out what works best for you. So we're really gonna come to our, little concoction of what works best for everyone, and all together collectively. Okay, guys, it's been a blessing speaking with y'all.
Likewise, thank you.
Are we gonna post it in NB channel? Yes. Post it in the channel, in the A and B channel. No problem. All right, so I'm gonna post a link to the video for the ICT, and then we're gonna be studying. So I'll see y'all, what is that, Wednesday? On Wednesday morning. I'm gonna try to come tonight at 8 o'clock. So I'll probably be there. So I'll see y'all tomorrow at 8. But if not, I'll see y'all Wednesday at 10. All right. Y'all be blessed. You're welcome. I hope y'all learned something from this, and we're about to get it going.
Yes, thank you, Brianna.
Let's say a prayer.
Bye.
Dear God, we ask that you thank you for this meetup. Thank you for everything, Lord. We ask that you continue to bless us and open our eyes to see things that we couldn't see. We ask that you give us peace in our homes, peace in our minds. We ask that you send us love and the right things to say to our loved ones, to our children, to our pets, Lord. We ask that you keep us and guide us until next time we see each other. In the name of Jesus, we pray. Amen.
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 All right. Bye, y'all.
Bye.